Compare and contrast for us what's happened tonight in the markets compared to what happened on the 23rd of June with Brexit.
Well, there's clearly a bit of a muscle memory here for markets. The initial panic has been met by some buying of lower equity markets this morning. I think for many investors, this probably confirms a lot of some of the more bearish investors' fears about global markets, that the US economy, having been one of the strongest economies in the world, is perhaps due for a pause here. And that perhaps now with the dollar having run as strong as it has, if rate rises are now perhaps not as pending as we thought, and the dollar perhaps weakens a little bit, then the opportunity for other non-US equity markets, especially as a global investor, to come to the fore are only reinforced by the American electorate's decision overnight.
Matthew, are you using this as a buying opportunity, particularly in US markets where there are still sort of 2% declines?
Yeah, I think for me the interesting place actually is not to focus on the US here, but is to look overseas, is to look towards Europe, perhaps less so Japan, given obviously the dollar down, the yen is up, and that's clearly bad for Japanese equities, but to look towards emerging markets. Clearly some emerging markets, Mexico of course clearly are not places I would be looking towards, but there are other countries around the world, independent of the trajectory of the US economy from here, that are going to be more interesting, I would argue, relative to US equities.
Like what?
And with valuations where they are in the US. Well, I think Brazil is interesting. I think Korea is interesting. I still wouldn't discount looking at places like India. But what I wouldn't be doing necessarily is looking at the US market, given the valuation premium that is still there, given likely slower growth, and the ongoing pressures we're seeing on corporate margins. I think earnings estimates will have to come down for the US next year. And with valuations where they are, I think as a global investor, I'm being paid to take my clients' money and invest it elsewhere, namely in Europe and emerging markets.
Why do you see slower growth in the U.S. After a quarter where growth actually picked up?
I think there's every chance that certainly now business confidence has been shaken a little bit in the US. Certainly there is an unknown in the US electorate putting in power someone who has never held elected office. And I think they'll be, given that this is the time of year when corporates budget for the year ahead, I think it's fair to expect a more cautious outlook for 2017. So I'm not saying US growth is peaking or we expect it to fall, but I certainly expect a pause here in confidence. And I expect investors to similarly look elsewhere where the growth outlook is perhaps more certain, and more importantly, the valuation discount is there. That's not currently the case in US equities.
So we're just getting all these notes from strategists and economists reacting to the news and initial thoughts on what it means for the markets. Matthew, UBS saying U.S. defense companies should outperform, managed care companies in the healthcare sector should suffer, as Trump has promised to work on repealing Obamacare. Just two sort of industry-specific issues that could come up based on Trump's promises and this Republican sweep. Do you agree with those calls, and what would you add?
Yes, I do. And look, every investor around the world is dusting off the ready reckoner they never thought they'd have to use of a Trump presidency with a Republican Senate and House. And, and I agree with both those two sectors. I'd also draw attention, of course, to the energy sector, and importantly, the clean energy sector. You're seeing here in Europe shares of Vestas wind systems, the turbine manufacturer, down heavily this morning. So you'd expect a pro-energy, anti-alternative energy slant to markets. We've obviously all focused on healthcare. There's a relief rally going on in healthcare across Europe today because they're defensive stocks, of course, but also because of their because the anti-Clinton overhang has been removed. And there will be people that worry naturally from a defence perspective. There'll be economies around the world that are slightly less certain about their place in the world standing, and Japan is one of those countries.